Hi, I'm Ann Garcia, a fee-only certified financial planner. As the College Financial Lady, I've helped thousands of families save millions of dollars on college. I'm going to tell you 8 things that are not reported on the FAFSA. As daunting and exhaustive as the FAFSA seems, these 8 things don't get included. Since these are often items that could be almost punitive in other circumstances, it's worth exploring them in a little more detail. Number 1, any money that you don't have on the day you file the FAFSA. That can be money that you use to pay your credit card bill or your mortgage. It can be your paycheck if you filed before you get paid. It can be gifts that others give to you as long as they do so after you file the FAFSA. It can be an inheritance that hasn't yet been distributed to you. You should file the FAFSA on the date when you have the least money in your bank accounts. Number 2, distributions from parent-owned 529 accounts. This is the secret sauce of 529s versus taxable investment accounts. Gain in the 529 account is not reported as income on either your tax return or the FAFSA. Number 3, money in retirement accounts as of the date of the FAFSA filing. Parents who normally wait until they file their taxes to make IRA contributions can instead make those contributions prior to filing the FAFSA. You can overfund retirement accounts such as by contributing to both a 401k and an IRA as long as you correct the overfunding by removing the excess before the tax filing deadline. If you delay, you will be penalized. Number 4, credit card and student loan debt. These are not subtracted from your assets, so use your liquid assets to pay down debts prior to filing the FAFSA to reduce your assets since they're not reported net of consumer debt. Number 5, 529 accounts for your students' benefits that are owned by anyone other than the custodial parent who files the FAFSA. If grandparents have a 529, it doesn't get reported. If the parents are divorced, the parent who doesn't file the FAFSA doesn't report 529s that they own. However, all of the parents' 529s for all of their children do get reported on each student's FAFSA. And remember that the CSS profile asks for all 529s for which the student's the beneficiary, regardless of owner. Number 6, mandatory retirement contributions. If your employer requires you to contribute a percentage of pay to your retirement, this is not added back to your income because it's not discretionary. Mandatory contributions are reported in box 14, not box 12 of your W-2. Number 7, each child's own assets and income are not reported on the other child's FAFSA. It's possible that in the same family, some students will get need-based aid and others won't. So you can make different decisions about each student's assets depending on their situation. And 8, income received from a work-study job. Work-study is considered financial aid and therefore it's not counted as income. Obviously, not all of these are applicable to every situation, and in many cases, there are good reasons related to other aspects of your financial situation to do the opposite of what's above. CPAs and fee-only financial advisors are a great resource in looking at how college planning fits in your overall financial picture. I'm Ann Garcia, the College Financial Lady. If you found this video helpful, click the like button and subscribe to my channel to get notified of more content like this. If you want to learn more about the FAFSA or anything else related to paying for college, visit my website, thecollegefinanciallady.com, where I've got tons of info on everything from the FAFSA and merit scholarships to saving strategies, tax credits, and appealing financial aid awards. Lastly, if you want to map out a detailed college financial plan for your family, there's a discount code at the end of this video for my College Financial Plan Masterclass, which you'll find on my website.